Hello and welcome back to Kitco Mining's Digging Deep with me, Paul Harrison, sponsored by Revival Gold, in which we take a closer look at some of the most interesting news items in the mining space. Joining me today is Christopher Ecclestone, Principal and Mining Strategist at Hallgarten Company. Christopher, welcome back to Kitco.
Hello there.
Now, please note, Digging Deep is not investment advice, and the opinions expressed here are our own and not Kitco's. Let's start with gold. Gold continues to swing below and above US $2,400 per ounce after hitting a new record of over $2,500 recently. Most companies have reported their results to the end of June, including AngloGold Ashanti, which has been one of the best performing gold stocks this year. It is up 46% year to date, and it's just hiked its dividend from 4 cents a share to 22 cents per share after quintupling profits to $313 million. This is the biggest dividend increase we've seen so far this reporting period. Chris, let's bring you in here. Are gold companies returning enough to shareholders, given that the gold price is up about 20% year to date?
No, that one is, and it gets rewarded by the market. And then other gold producers complain, we're not getting the love from the market, and yet they're not hiking their dividends. They're saying, oh, those profits we're going to reinvest. My thesis is that it's up to the investors to reinvest. If they want to buy more shares of company X, they can put them back in via financing, but it's not up to the companies to say, oh, we had a fantastic year, we made really big profits and we're going to keep it all for ourselves and nothing for you. And AngloGold Ashanti have quite rightly said, we've had a fantastic time and you can enjoy it with us via a dividend. And so we still have this culture out there of these companies that think that they know better than investors how to invest the investors' money. And this, we see in the industrial sectors, in finance sectors, other sectors, the dividends are paid. And the mining sector just thinks that their managements know better than the investors how to put money to work. And, the long history of poor management decisions in the mining sector would disprove that theory. So I think it's great that the money is given back to the investors and then they can allocate that money how they like to more of the same or into something else. I think the miners need to get the message out of that. The fact that AngloGold has outperformed on stock price front is pretty much an endorsement of their strategy.
Well, thank you, Chris. Now, there's more than one way to return money to shareholders. Dividend is one of them, but buying back stock is another. Where do you sit on the dividends, buybacks, combination of both?
I don't believe in buybacks at all. Buybacks make the presumption, and it's very much an institutionally oriented presumption, that the person who's selling the stock back to them has no capital gains tax responsibility. And as we know, virtually all private investors have a capital gains tax liability in selling stock that they've made a profit on. So it's okay for an institution like a pension fund that may not have to pay cap gains, but for the individual investor, stock buybacks are a slap in the face.
I always thought it was odd, Chris, that buybacks are labelled returns to shareholders because they reward shareholders for leaving the stock rather than dividends, which reward a shareholder for staying.
Exactly. Yeah, exactly. It totally flies in the face of the logic of what one's trying to achieve here. Reducing the number of shares on issue, and then they will go and do a financing after they've reduced the number of shares on issue. It's sort of like crazy.
I did a study on this last year, I think it was, and when you look at companies that have normal course issuer bids, which is the mechanism companies use to repurchase their stocks, their share count continues to sort of tick up, even though they're buying back stock. You touched on this in your first comment, Chris.
What it also does is it makes the options that executives have move into the money or, makes it worthwhile for the executives to actually exercise their options. And paying out dividends doesn't necessarily do that because, of course, stock goes ex-div, goes down by in the case of AngloGold, probably down by the 22 cents in dividend that they pay. And it makes the goal for executives of getting their options into the money that much harder to achieve. But with a stock buyback, you're almost guaranteed that you can sort of manipulate the stock price to get it where you want it to be.
I mean, that's an interesting point of view, Chris. Now, in your initial comments, you're talking about companies thinking they know better than investors where to invest. Now, obviously, with the profits companies make, in addition to dividends and buybacks, they can also invest in growth, mergers and acquisitions, building mines, etc. Where should that fit into the picture?
Well, it comes back to the basic fact that transactions, mergers and acquisitions have to be bottom line accretive. And not bottom line accretive in 5 years or 10 years. They need to be bottom line accretive like fast, because you're sacrificing the earnings now by bumping up the debt burden or diluting the share count or whatever to facilitate these transactions. And you're hoping that the transaction will eventually pay off. But there are serial deal doers out there who actually are never delivering on the stock price front. They're not delivering on the earnings. They're not delivering on the dividends. They're just not delivering. And these transactions are just sort of like spinning the wheels. Mergers and acquisitions should be accretive within the first or second year. And, in the mining sector, of course, mostly if we look at, say, an industrial company, an insurance company buys another insurance company, the goal is that they get down the overheads, they rationalize, and then all of the profits of the company that was acquired then become the profits of the company doing the acquisition. But in many cases in the mining sector, you've got a company that's producing, buying an asset, or a company that's not producing, and in fact, it just increases the share count, but actually doesn't increase at all the profits. So you've got dilutional effects. That is not accretive. And too many of the transactions are producing companies buying non-producing, which doesn't add to the bottom line.
Well, we'll be touching on that a little bit later on in our conversation. Now, another trend in the gold space amongst gold producers is their increasing penchant for copper. We had another example of this recently, Goldfields. They're looking to option and joint venture the Santa Cecilia copper gold project in Chile from Torq Resources. They have a two-stage option there to acquire up to a 75% interest by incurring $48 million of exploration expenditure over 6 years. Goldfields already owns 15.5% of Torq. Chris, there's a divergence of themes here. First is Gold Co's looking at copper. How widespread is this trend, and is this a good trend?
No, it's not a good trend. People should stick to their knitting. If they're gold companies and they know how to do gold, and they're touting to their investors that gold is really great and gold cannot be bettered, then why are they diversifying away into something else? It's sort of a case of do what I do rather than do what I say, because they're clearly not believing their own propaganda that the gold story is the best story to be involved with. And, we've got a classic example. This whole trend started back when Barrick decided it was, when was it, 12, 15 years ago, when it decided it was going to get into copper and ended up having to spin out the copper because it didn't work. There are a few copper gold mines out there where you get, 2 for 1, which is okay. But really, looks like a paucity of ideas on the management front that you have to diversify into another metal. And the stories are driven by totally different factors. People are now grasping onto the, copper as an EV metal, an energy metal, a transition metal, whatever. Gold has never really been that. Gold's a store of value. Gold's a safe haven. Gold's a hedge against inflation. It's a totally different story. There's nothing energy transition about gold.
Okay. Now, I think one interesting aspect here is, some of the bigger gold companies are looking to get into copper projects, but another question related to that would be, why aren't the copper companies looking to get into those copper, gold, copper projects?
Yeah, maybe because copper companies believe in what they're doing, whereas the gold companies do not.
Okay. Now, from Torq's perspective, the junior involved in this transaction, for me, this shows how difficult it is for the junior copper explorers to raise finance to do meaningful work, even though there is a recognized shortage of development projects in the copper pipeline. Chris, what will it take for the funding purse strings to open again for the junior copper explorers?
Well, we had a move up in copper. It looked like it was going well, and it's sort of paused now. I think it would need to keep going up. Many of these copper explorers, the copper world is divided into the mega projects. We all know them, the Chuquicamatas and Toyo Olgois, et cetera. They've been going on for ages. The small copper developers, well, the explorers, they essentially find it and then hope to flog it on. Many of them are not dedicated to production. And if they're aiming for a really big project, they're pretty much assured that they can't do it themselves. And we saw, even Lundin having to, do this deal that they did in Argentina last week, having to jump into bed with BHP. And one would have thought that Lundin could have done that themselves without having to do that. But seemingly not. People are hedging their bets. They're wanting to tie up with someone else who's big. And we have, McEwen owns McEwen Copper and is sort of like rather tardy in setting McEwen Copper free. Whereas, the market's sort of almost begging to have a pure play McEwen Copper story than having all mixed up with gold.
Now, an interesting aspect there, you mentioned Filo and the deal they've had with BHP. Filo has absorbed a lot of exploration equity over the past few years. Their typical raise is, let's say, $100 million. With Filo now going to be part of BHP, would that free up more equity capital that could potentially therefore go into other junior copper explorers?
It's almost like you've made that question for me because, of course, I'm a rabid fan of the potential of San Juan province in Argentina. Indeed, I've been quoted as saying that San Juan is the new Chile, and I think gives a big kickstart to the other projects that are there. And we have big players like Glencore have a project there, El Pachon. And then we have others like McEwen Copper with Los Azules, and you've got Aldebaran with Altar. Money can potentially head into those now because Filo's not going to be, rattling its cup to the market because BHP, of course, has almost bottomless pits of money to put to work there. So we're not going to have any drain on the markets anymore from that. So everyone's going to be looking at what next. And, it's quite obvious what's next. There's a whole bunch of really good projects there that are, dare I use the word, world scale, that can be brought online and, absorb that money. But as long as Rob McEwen doesn't want to set McEwen Copper free, it's people are frustrated that they can't get their hands on the next big project because he's sort of like sitting on it like an ostrich on an egg.
Well, hopefully I've got an interview with Rob McEwen in the next month or so. So that's a question I will definitely ask.
You can give him my thoughts on that one.
Okay, we have a lot more to come, but first we're going to take a brief break and a word from our sponsor, Revival Gold.
Revival Gold, ticker RVG on the TSXV and RVLGF on the OTCQX market, is one of the largest pure gold mine developers in the United States. The company is advancing engineering and economic studies on the Merkur Gold Project in Utah and mine permitting preparations and ongoing exploration at the Bear Track Arnett Gold Project located in Idaho. The company is financed and currently focused on the completion of a preliminary economic study on heap leach gold resources at Merkur and continued exploration along 5 kilometers of underexplored structure at the company's multi-million-ounce orogenic gold system at Bear Track Arnett. For more information, please visit www.revival-gold.com.
Hello and welcome back for part 2. We really appreciate our sponsor for supporting the channel and helping to bring you a deeper dive on mining news. Now let's talk about Glencore. Following completion of the acquisition of a 77% interest in the Elk Valley Resources in July and following consultation with its shareholders, the company is not going to demerge its coal business. In this, it is bucking the trend as Anglo American and Teck Resources, other diversified miners, have divested their coal businesses. Chris, Glencore and its shareholders clearly want to keep the income that coal generates. What are your thoughts on Glencore holding on to its coal when other miners have let theirs go?
Well, I have to say that I'm biased here in that I'm a Glencore shareholder. Now, I don't like Glencore management because I think that they're sort of they're very profit dedicated, let's say, and they don't let much stand in the way of making a profit. And common sense would say hang on to the coal because it's a great business, and modern theory and the vibe of the moment says, oh, coal's unfashionable. Why shouldn't Glencore hang on to an asset that makes them money? It might be unfashionable. You know, people have still kept buying Glencore shares, and it's a very attractive investment on multiple fronts, despite, whatever sort of run-ins it might have, with the morality police. I can see why they want to hang on to it. It makes sense. I can see why the shareholders want to hang on to it. It's almost like a bit of a dance where Glencore say, or we're going to spin this out to match the zeitgeist, and then the shareholders say, oh, no, we're not. We want to hang on to this. And then Glencore management say, our shareholders have spoken. What can we do? We'll hang on to it. And I think they want to hang on to it. And the shareholders have given them an out here in forcing them to hang on to it.
I'm quite surprised in some ways that the Glencore CEO hasn't said, look, if you want to invest in a diversified miner that doesn't have access to coal, you can invest in Rio, you can invest in BHP. There are other companies. But, Glencore, a lot of its profits are generated from coal. A lot of Teck's profits formerly came from the coal, but Teck obviously doesn't have access to that now. But this leads us into the next interesting point. Most of the diversified miners want to increase their copper exposure through developing projects, and having more profits available through coal to fund developments would seem to be a sensible strategy. Chris, with Teck, they're still reeling from their QB2 cost blowout in Chile, and having sold their copper business, which generated most of their profits, do you think they'll find it challenging to further grow their copper business?
No, there are plenty of assets that they could buy. They could buy Aldebaran. They could buy McEwen. And by McEwen, I mean all of McEwen. Not only the good, the McEwen copper, but also the not so good, the McEwen gold business. And, that would fit in very nicely. Teck has so much money now. They're just sinking in money. They're the most cashed up, company out there. They seem to have taken this approach that they're only going to be Americas, even though they used to be all over the world. And, well, taking over McEwen fits in with that strategy. And that would seem to be a good thing for them to do. They're not the strongest group intellectually, as we've seen since 2008 when they first bought into coal. because that really hobbled them. They've taken away the potential for being the Canadian BHP in a very denuded field, which lost Inco, it lost Noranda, it lost Falconbridge, it lost all the champions. Now Teck could theoretically become the Canadian champion again, but is its management up to it? Is its management too old? The one thing its management is cashed up. So come on, guys. You've had a good 6 months round there. They did actually make a move into copper in South One in 2024 when they cut a deal with Abra Silver on Abra Silver's properties in South One province. So it would be a much better and bigger commitment to copper to make a move on McEwen. Maybe McEwen's just afraid that if he spun out McEwen copper, it would be snapped up almost straight away. But I think it's time for those parties to come together and create a proper major for the Canadian market.
Well, Rob McEwen's a big boy. He's been through this kind of thing before, so hopefully he
might end up on top.
Absolutely. Well, one sort of copper developer that may be coming into play is Arizona Sonoran Copper Company. They've just reported a PEA on their Cactus copper project in Arizona in the USA that rescopes the exploitation of the Park Saley deposit as an open pit operation that will produce £232 million a year of copper cathode at a C1 cash cost of $1.82 per pound for the first 20 years of a 31-year mine life. That would make it the fifth largest copper producer in the US. The project has a post-tax internal rate of return of 24% and a 4.9-year payback at a $3.90 per pound copper price, following an initial capital investment of $668 million US. Stressing the local benefit of the project, they came out with a rather nice phrase of the local economic benefit is the equivalent of bringing the Super Bowl to Casa Grande every year, which I think is a great way of communicating with them.
Way of putting it.
This seems to be
makes it real for the locals.
Exactly.
When you put that out there, because people that are, there are people that are employed at a mine, and then there's a trickle down effect. But that type of putting it in those terms definitely makes it more real for the public in Arizona, or the parts of Arizona, that they could be having perpetual Super Bowl for 30 years.
But maybe they should have said it's the equivalent of having a Taylor Swift concert every year.
Well, you're going to have Taylor Swift at the Super Bowl.
Well, okay. It seems to be a very strong project that could come into production in the medium term, I think potentially from 2027. The market liked it. Yep. The company shares opened 11% higher this morning. Chris, what are your thoughts on these sort of medium-sized copper development projects? What sort of role will they play in the energy transition?
It makes it clear that these people are saying that there's no pipeline of new copper projects are wrong. And these people who say that there's no new copper to be found. Sure, we don't have chuquicamatas, hanging on trees, but we do have lots of these medium-sized projects. They're out there. They're still being found, and they're being found, not in out-of-the-way places. I mean, Arizona's not out of the way. With great infrastructure, one looks at these projects in the Andes, etc. They're a long way out of, away from infrastructure. So it's important that we focus on the reality, which is that the projects do exist, and the big companies that claim there's nothing to buy are frankly liars, because there are things to buy.
Another striking aspect of this project, Chris, is that its capital intensity is, I think, about $8,000 a ton, which is, let's say, approximately half of what it would be for some of the projects high up in the Andes. So potentially a very project to build.
Yeah, very doable.
Let's turn to lithium. One of the hottest lithium stocks last year was Patriot Battery Metals. And this week it released a resource estimate for its Corvette lithium pegmatite project in the James Bay region of Quebec in Canada. It's calculated on the CV5 and CV13 pegmatites with an indicated resource of 81 million tonnes, grading 1.44% Li2O, with an inferred resource of 62.5 million tonnes as well, making it the largest lithium pegmatite resource in the Americas and the 8th largest globally. The resource also includes the critical mineral tantalum. Chris, you keep a sharp eye on all the critical mineral space. How important could that tantalum kicker be to Patriot and Corvette?
Well, it could potentially sink the tantalum market. Tantalum does not have any sort of like very strong demand scenario at the moment. You know, it's a critical metal and strategic metal, but you know, it's out there. It exists. It's accessible, and you know, a lot of it comes out of Africa. I don't think the tantalum thing is particularly attractive. If they had cesium, that would be interesting. But at the same time, I just think James Bay and everything up there is sort of like surplus to requirements at the moment. Maybe in 50 years when we start to run out at some of the deposits in Australia and Argentina and Nevada, we might go to James Bay. But for the moment, don't really need James Bay.
Well, that's a good prelude to my next question. The lithium price has come off a lot in the past year or so, forcing leading producer Albemarle to shut a large part of its Kemerton lithium hydroxide processing plant in Western Australia, as it believes the depressed lithium prices are here to stay. It will also stop construction of the third production train at Kemerton. So, Chris, what is happening in the lithium space? Why has the price crashed when the demand growth outlook continues to be positive?
Well, it's not that positive. I think what's happening is that the demand is still growing, but it's growing at less than people thought it was going to grow. And some of these companies, you know, and particularly in Albemarle, I saw in recent days they were asking for, you know, restrictions on China, production coming out of China, and they were almost looking like they were wanting subsidies from the US government. This is a company that was bidding outrageous amounts of money only last year for Liontown, and fortunately totally dodged a bullet by having Gina Reinhardt weigh in and muddy the waters. Really, I'm flabbergasted that Albemarle don't know their own business. They've been in it for long enough. How have they been so wrong-footed?
Well, lithium does have very much the sort of boom-bust cycle because it's still by volume.
They should know that. They should know that. There was a lithium cartel, and they were part of that cartel, and they made sure that it didn't have booms and busts. And it was only in the last 10 years that the cartel has broken down and it's become a free-for-all. But they should have known that lithium has its ups and its downs and its roundabouts.
So one of the aspects there is in a relatively small volume, low volume market, somebody builds a mine, it dramatically increases the supply, and therefore demand can't absorb it, or it takes time to absorb, and that's when the prices crash, then rinse and repeat.
But we've got like 15 mines being built, not just one. Back in the old days, that when lithium was just used for for a few small battery applications and for ceramics, it was a tight market that was controlled by the cartel. Once it's become this big free-for-all with an unknown amount of potential demand and a flock of potential new entrants, it was a market that one needed to be very careful about playing in. And some people thought, many people in the lithium market in the West said, oh, we don't believe the prices that are being quoted in Shanghai and this speculative bubble that was created in prices. But yet they were acting as if they did believe it, because they were helping to feed it by making these outrageous bids and these M&A deals that have now come back to haunt them. So they should have known better.
Okay. Now, Patriot has also changed the name of Corvette to Shaakichiuwaanaan. That's the best attempt I have at pronouncing that. Chris, a difficult to pronounce name. Why on earth would a company change the name of their main project to something that a lot of people can't even pronounce?
Pandering to local interests, but also it seems to be it's a name that will be imminently impronounceable and very forgettable. So let's just forget about Patriot and move on to projects that are going to be able to be done. When you name your project something that's unpronounceable, it's because you're not really expecting a lot of people to be pronouncing it.
A very interesting take on that. Excellent. Well, that's all for this week, Chris. Thank you very much for joining us today.
You're welcome.
I'm Paul Harris, and this is Kitco Mining.